Welcome. In this video, Zbcn holders don't sell your Zbcn coin. So why? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
The presence of a bearish order block just above the price is actually one of the most important technical structures in the market, and such areas rarely go unnoticed by investors. A bearish order block represents a zone where strong selling previously began, and the price was pushed down sharply. Since this area indicates weakened buyers and dominant sellers, investors often view it as a barrier that can hinder price progression. However, the key point to note is that if such strong zones are broken, market psychology changes completely, opening the way for a new trend. Specifically, when a bearish order block located just above the price is broken, it represents a major breakout not only technically, but also psychologically and fundamentally. Breaking this level means that sellers have lost control in the market and buyers have fully taken over. From this point, reaching a new all-time high, ATH, becomes almost inevitable. Price congestion in this area and repeated testing by buyers indicate upward pressure. Imagine a market repeatedly testing the same level with sellers attempting each time to push the price down. If the sellers were strong enough, the price would have already broken lower. But if instead the price continuously climbs toward this block, it shows that the buyers are the dominant force. When the bearish order block is broken, the selling pressure from traders is removed, triggering a chain reaction of stop orders. Many traders open short positions in this zone, and if the price rises, these short positions get stopped out. This creates additional buying pressure in the market. Therefore, the combination of technical breakout, psychological pressure, and chain reaction buys in the order book pushes the price rapidly upward. This is why breaking the bearish order block just above the price opens the door for a new all-time high. A new ATH represents one of the strongest psychological levels in the market because investors encounter price levels they have never seen before. In these previously untraded zones, there is no significant technical resistance. Once the price breaks through, there is no immediate barrier that exists, accelerating the upward movement as the market enters unknown territory. Most investors begin thinking the price can go even higher, prompting new buying. Additionally, those who previously purchased at lower levels are not in a hurry to sell, believing that potential gains will be much larger with a new ATH. This psychological wave generates strong momentum, rapidly pushing the price higher. It should also be noted that breakouts of order blocks are often supported by institutional investors. Bearish order blocks are frequently areas where large investors exert selling pressure. If the price breaks this zone, it indicates that even major players have changed direction or that their selling has become ineffective. The combined strength of retail and institutional buyers ensures the sustainability of the upward movement. Therefore, the presence of a bearish order block just above the price and its subsequent breakout can signal not only a short-term move, but also the beginning of a long-term uptrend. Especially following this breakout, the market reaching a new all-time high is one of the clearest signs confirming the strength of the trend. Breaking the bearish order block also changes the liquidity structure in the market. Many traders view this zone as a liquidity gathering point. As the price rises, sell orders are removed, and their stop orders turn into buy orders. During this process, as the price moves upward, a dual buying pressure forms. On one side, buyers enter to catch the new uptrend, and on the other, closing short positions support the price. When these forces combine, the price can move upward very quickly. In this case, reaching a new all-time high becomes not just a possibility, but an almost inevitable outcome. Another point to remember is that volume tends to increase during breakouts of such critical zones. Strong breakouts are always supported by high volume. If the price breaks the bearish order block above it with substantial volume, investor confidence increases. Low volume breakouts can often be fakeouts, but strong volume breakouts are the clearest indicator that the upward movement is sustainable. Thus, the path to a new ATH is strengthened not only technically, but also through volume support. The price not only overcomes technical and psychological barriers, but shows that capital inflow in the market has significantly increased. Another important psychological effect is this. When the price reaches a new ATH, media and social media attention increases rapidly. People hear new high news and rush into the market. This triggers FOMO, fear of missing out. New investors buy hastily, while existing investors hold, believing the uptrend will continue. This psychology accelerates the price increase, and the trend that begins after the breakout becomes a self-reinforcing cycle. The breaking of the bearish order block is therefore not just a technical structure, but also a trigger for a collective psychological movement. In summary, the presence of a bearish order block just above the price represents a major opportunity. When the price breaks this level, it not only overcomes a technical resistance, but also shatters psychological barriers. Sellers lose power, buyers gain strength, volume increases, FOMO is triggered, and with institutional investors changing direction as well, the price rapidly reaches new highs as if unleashed. Therefore, following such a breakout, a new all-time high is considered almost a certain scenario. Understanding this process helps investors better understand both psychology and market mechanics, clearly showing that such an opportunity is a turning point. But we can't rely solely on order blocks for analysis. Let's look at other metrics as well. Stay tuned.
The MACD indicator is an extremely effective technical tool that helps us understand market momentum and trend direction. This indicator consists of two main lines, the MACD line and the signal line. These two lines can converge, diverge, or cross each other. A position above zero indicates that the market generally carries upward momentum and is a strong sign that the price is currently supported by buyers. Currently, the lines are above zero, showing that the market is fundamentally in an uptrend, selling pressure is relatively low, and buyers are in control. Being above the zero level indicates that the MACD signals not only short-term movements, but also positive long-term momentum. This suggests that the price is more resistant to sudden drops and upward movements are more likely. A renewed upward cross of the MACD lines, where the MACD line crosses above the signal line, is considered a strong buy signal in technical analysis. When this crossover occurs, it is expected that market momentum will increase, buying pressure will strengthen, and the price could rise quickly. This situation signals a potential start of an upward move and indicates the continuation of the market's bullish trend. The upward crossover of the MACD lines confirms that the current trend is accelerating and that short-term corrections have ended. Such a crossover can lead the price to quickly break past previous resistance levels and attempt new highs. A MACD crossover above zero also indicates that the market is fundamentally and psychologically in a positive environment. Investors gain confidence that the price will move upward and increase their positions. This confidence boosts market liquidity, increases buy orders, and contributes to rapid price increases. Especially when the MACD lines are above zero and close to each other, an upward crossover is a clear sign that the price is likely to launch a rapid and strong short-term move. This crossover demonstrates that both momentum and market psychology are aligned on the buying side. Additionally, a MACD crossover above zero serves as a critical reference point in investors' decision-making processes. Many traders base their buying decisions on this signal, shaping market direction. Therefore, the price starting an upward move is not only a technical event, but also a psychological trigger that influences investor behavior. When this crossover repeats as it has in the past, it creates a chain reaction that strengthens upward price movements. Buyers increase their positions, sellers withdraw, and stop-loss orders are triggered, creating additional buying pressure in the market. As a result, the price gains significant upward momentum in a short period of time. Another important point is that the impact of MACD crossovers is enhanced when supported by other technical indicators. For example, when analyzed alongside RSI, Bollinger Bands, or trend lines, a MACD upward crossover becomes a more reliable buy signal in technical analysis. Multiple indicators giving positive signals simultaneously significantly increase the likelihood of a price surge. A crossover above zero attracts not only short-term buyers, but also medium and long-term investors who support the continuation of the trend, making the price rise stronger and more sustainable. In conclusion, when the MACD lines are above zero and form a renewed upward crossover, it is a strong indication that the price is about to launch a move. This represents a buy signal from a technical perspective, shows strengthening market momentum, and increases investor confidence. The position above zero confirms the bullish trend, while the upward crossover allows the price to quickly surpass previous resistance levels, attempt new highs, and potentially initiate a strong upward surge. This crossover is not only a technical event, but also a multi-dimensional indicator that, combined with psychological and liquidity effects, enables the price to move upward rapidly.
The flag pattern is an extremely powerful and effective formation in technical analysis that signals the direction in which price movements are likely to continue after a short period of consolidation. Flags typically form during an uptrend,
and are characterized by the price moving sideways or slightly inclined within a narrow range for a certain period. At the end of this narrowing channel or flag-like structure, if the price breaks above the upper boundary of the flag, the movement can continue by a distance equal to the previous upward move. In other words, the flag provides investors with important clues about both the direction and the potential price target. From a technical analysis perspective, this is a critical indicator for understanding the strength of the trend and the potential after a breakout. When the price breaks the upper boundary, by the nature of the flag pattern, a movement is expected to occur equal to the distance between the previous price highs and the rise before the flag formation began. This simply allows the target price to be determined by measuring the height of the formation and adding it to the upper boundary. This measurement method is considered a classic and reliable technique by technical analysts for flag pattern breakouts. For example, if the distance between the pre-flag rise and the flag formation is significant, the price movement after the breakout will be proportionally strong. This provides investors with a reference point both psychologically and mathematically, allowing the target price to be calculated logically. The breakout of the formation also indicates that momentum in the market has regained speed and that buyers have taken control. Breaking above the upper line of the flag signals the continuation of the trend and the strengthening of the current uptrend. When investors see this breakout, they increase their buy orders, which contributes to the price moving upward rapidly. The psychological effect here is significant because investors view these technically determined breakout points as strong support and resistance levels. When the flag's upper boundary is broken, buyers increase positions, sellers withdraw, and the price accelerates upward. This chain reaction makes flag breakouts a high momentum event in the market. An expected increase of around 1,100% is important for understanding the potential of this formation. This percentage represents the theoretical price target calculated by adding the initial rise of the flag to the height of the formation. From a technical analysis standpoint, such large percentage increases are based not only on past price movements, but also on investor psychology. When investors see the formation break, they may buy aggressively, which can push the price to the target levels quickly. This is a multidimensional effect that enhances both market liquidity and the price's upward potential. The breakout of the flag pattern does not only indicate a technical rise in price, but also signals a positive shift in market psychology. Investors interpret the breakout as a reliable buy signal and position themselves accordingly. Especially when supported by volume, this allows the price to rise rapidly. A high-volume breakout confirms the strength of buyers in the market and significantly increases the likelihood of reaching the projected 1,100% increase. Additionally, short-term corrections following the breakout are often viewed as buying opportunities by investors, further supporting the continuation of the trend. Furthermore, the breakout of the flag pattern is a critical signal not only for short-term, but also for medium and long-term investors. Medium and long-term investors anticipate that the price will enter a stable uptrend following the breakout and expand their positions. This increases overall market liquidity and makes the upward movement more sustainable and robust. Due to these characteristics, flag patterns are among the formations that investors follow with high confidence in technical analysis. In conclusion, such a flag pattern offers a potential rise equal to its height when the price breaks the upper boundary. This serves as both a technically calculable price target and a psychological signal that increases investor confidence. The potential increase of around 1,100% is directly related to the height of the formation and the momentum of the breakout. Breaking above the flag's upper line indicates that buyers have taken control, momentum has accelerated, and the price can reach its targets quickly. Therefore, flag patterns, especially when appearing during a strong uptrend, are extremely important and reliable indicators in technical analysis for predicting price movements and evaluating potential gains.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.